Hello traders, welcome to this channel. I've decided that I want to share my smart money concept simplified course. This course will be very simplified, but it will hold a lot of information and it will help you in becoming a smart money concept trader. And I've only decided that I'll teach you just the things that you need to master smart concept strategy. So let's get to it. The first thing that we'll be talking about is market structure. Now, market structure refers to an attitude that the market will take at a given time. There's three such attitudes. There's a bullish market structure, there's a bearish market structure, and there's a ranging structure. Now, a bullish market structure is actually what is known as an uptrend. Now, in an uptrend or in a bullish market structure, the high points keep on going higher than the previous point, and they continue going higher as long as we are in an uptrend. And the low points also keep on going higher, and they continue going higher as long as we are still in an uptrend. Now, these high points are referred to as higher highs. A higher high is a point that is on the high point and is higher than the previous point that was created by the market. Now, these high points will keep on becoming higher than the previous point as long as we are in an uptrend. On the low side, these points are referred to as higher lows. They are referred to as higher lows because this low point here is higher than this previous low point here. And the market will keep on creating higher low points which are higher than the previous one as long as we are in an uptrend. And the move that is in the same direction as the trend is called an impulse. This is the move that the market moves in to create a higher high. All right. Now, the impulse move is in the same direction as the trend. Now, there's another move that happens within that same trend, but this move appears to be opposing the trend. Now, in an uptrend, that move is called a correction move, and that correction move is the one that is responsible for forming higher lows, right? Now, there's an impulse move which is in the same direction of the trend, which is responsible for forming higher highs, and there's a correction move which appears to be opposing the trend and is responsible for forming higher lows. All right, that's a bullish market structure. Now, on a bearish market structure, this is a structure or a point in the market where the market will be in a downtrend. Now, in a downtrend or a bearish structure, the high points now are going low. They go low, and these high points that go low are referred to as lower highs. They are referred to as lower highs because this high will always go lower than the previous high that the market created, and this other low will always go lower than this high that the market has created, and will continue to do so, to have these highs going lower and lower as long as we are in a downtrend or in a bearish market structure, right? And on the low side, we have lows that keep on going lower than the previous lows, and we refer to these points as lower lows. Now, lower lows simply means that a new low that the market creates will always be lower than the previous low that the market had created. A new low like this one will always be lower than the previous low that the market has created or had created. Likewise, on a bearish structure or on a downtrend, we have impulse and correction moves, right? But in this case, an impulse is going downwards because an impulse is always in the same direction as the trend, right? Now this impulse is going low and is responsible for forming a lower low, and there is a move that will be opposing the direction of the trend, and this move will be called a correction move, and this is the move that is responsible for forming lower highs, right? And that is what happens in a bearish structure. Now let's go on and talk about a ranging market. Now a ranging market is a market that looks something like this, right? Now in a ranging market, we neither have an uptrend or a downtrend. What we have is a market that is moving sideways, and this market has one high point and one low point that seems to be bordering or keeping the market within itself, right? It creates a border that the market moves within, and that's the reason why you don't find the market moving above this high or below this low, because in a ranging market there's only one high and one low that keeps the market within its borders or within itself, right? And now that's a ranging market. Now let's go over to the charts, and I'll show you how these markets look in a real life chart. I'll show you the bullish structure, the bearish structure, and a ranging market. Here we are on a Euro USD chart, daily time frame, and you can see that I have highlighted a bullish market structure. This is a bullish market structure because the market keeps on creating highs that are higher than the previous ones, and this high is also higher than this previous one. This high as well is higher than this previous high, and so on. And the market keeps on creating these highs, and it continues to do so as long as we are in an uptrend. And on the low side here, you'll see the market keeps on creating this low right here, which is higher than this low right here, and it created this low right here, which is higher than this low, and you can see that this low as well is higher than this low right here, and the market keeps on doing so as long as we are in a bullish market structure, right? Now you can see that, like I explained to you, we have an impulse move right here, which is in the same direction as the trend. This impulse move is responsible for creating a higher high right here, and we have a correction move as well that is responsible for creating a higher low. Now this low is higher than the previous low, and we'll have an impulse move creating a higher high and a correction move creating a higher low. Would have that move, structure, as long as the market is in an uptrend or a bullish market structure. Now let me show you an example of a bearish market structure, and you will see how they differ. Here we're still on Euro USD, but this is the 4-hour time frame, and you can clearly see here I've already marked out the bearish market structure, and we are in a bearish market structure because we can clearly see that the market keeps on creating high points which are lower than the previous one. This high point here is lower than this high point here. This high point here is lower than this high point, and this one as well is lower than this high point, and we call these lower highs. These highs will continue going lower and lower, and as long as we are still in a bearish market structure. Now on the low side here, we have lows that are going lower than the previous ones. Now this low here, you can see, is lower than this low, and this low here was lower than this low, and we continue to create lows that are lower than the previous lows, as long as we are still in a bearish market structure. And you can clearly see as well that if I just draw a line from up there to down there, we are on a downtrend. Now when we are on a downtrend, we will have an impulse move that is going the same direction as the trend, and this impulse move is responsible for creating lower lows. And we will also have a correction move that seems to be opposing the whole trend, and this correction move is the one responsible for creating lower highs on the upside. We will continue to have these impulse and correction moves, creating lower highs and lower lows, as long as we are on a bearish market structure, or we are on a downwards trend. Now let me find you an example that will show you a ranging market. Right here you can see that we have a ranging market. This is a ranging market because we have one high and we have one low, and this high and low seems to be keeping the market within its borders, right? So this high is keeping the market within its borders, and you can see that the market keeps on playing within here without breaking above here or breaking below here. Right now, this is the market that is ranging sideways until a point where this high and this low can be broken. We will still be on a ranging market. Now you can clearly see that right at this point we came and broke this high. Now when this happens, we can now say that we are out of this range right here, out of this ranging market. But before such a time as this that happened here, we would not be out of a ranging market. These breaks can happen on a high or on a low. In this case, we see a break that happened here on this high, and the market broke out of this range. Now the range will continue to move sideways as long as the market does not break a high or a low. That will be the range. Now in a range, we do not mark higher highs or higher lows, since the market does not continue creating highs which are higher than previous highs, like we saw on an uptrend or a bullish structure, or lows or highs that are lower than the previous ones, like we saw on a bearish market structure. In this case, the market does not do that. The market just keeps on being trapped within these boundaries that are created by the high and the low of this ranging market. Now you can see that if you come here and try to highlight these as higher highs, they will quickly be broken and the market will start forming lower highs, and while you're still marking those to be broken, and the market will go up into forming what seems to be a bullish structure, and then it will go back to forming what seems to be a bearish structure. Now when you see something like this happening and the market still moves sideways, but you are not really sure of what the market is doing, whether it's in a bullish or a bearish structure, in most cases chances are that you are in a range and the market is just moving sideways within these borders, right? Now until a market is broken, like I've said, one border is broken, like I've mentioned, you will continue to be in a range and will continue moving sideways in this range, right? Now the next thing that I want to share with you is something referred to as structure within structure. Now structure within structure is seen when you move from a bigger time frame to a lower time frame, right? Now let's say that this movement right here is happening on a 4-hour time frame, right? Now if you move from a 4-hour time frame and you go to a smaller time frame, let's say in this case 15 minutes, you will find that what seems to be a clear impulse move on a H4 time frame is another structure altogether in a 15 minutes time frame. Now if you highlight an impulse move on a bigger time frame and go look at that move in a smaller time frame, you'll see that that impulse move, if you are on an uptrend, that impulse move will be a bullish market structure. However, when you are in a correction move on a bigger time frame and you highlight that correction move, when you move to a smaller time frame, that correction move will look like a bearish market structure. And many people get caught because they look at the market on a smaller time frame, and in a smaller time frame they will think that the market is now in a bearish market structure just because they are looking on the correction side of that market. Now yes, it will look like it is in a bearish market structure, but be very careful when you see a structure within structure in a smaller time frame, because this can mislead you and you will say we are in a bearish market structure, and you start looking for sells, and before you know it, the market will be finishing this correction move on a bigger time frame, and it will go back to create an impulse that will form a higher high while you are stuck in this sell right here, and this sell will simply hit your stop loss, right? So now when you move from a bigger time frame to a smaller time frame, you have to make sure that you know what you're doing and you are not in a correction move, because this correction move on a smaller time frame will look like a bearish market structure. And don't get confused, this is just a structure. Within this structure we are still in a bullish structure, even though the smaller time frame shows us that we are in a bearish structure. So here you can see we are on the Euro USD chart. This is a 4 hours chart, and you can clearly see that we are on a downtrend here because the market keeps on creating a lower lows. You know, we are on a downtrend, lower lows this side and lower highs on the top, right? So we are on a downtrend. Now when we are on this downtrend, I want to show you a good example of structure within structure, right? So if I come here and I highlight this area, you can see that we are on a downtrend, right? So I'm highlighting the correction move of this downtrend. On this downtrend, you remember that I said to you that we will have two different type of moves, right? We'll have an impulse move, which is the move that is in the same direction as the trend, and we will have a correction move, which is a move that seems to be opposing the trend, right? Now if I highlight this impulse move, you know that this is a 4 hour time frame, and on this time frame, because this is a bigger time frame, we are on a downtrend. This is a bearish market structure and a downtrend. Now if we go to a smaller time frame with this highlighted, let's say we go to a 15 minutes time frame, right? So we look for that same box that we highlighted there. Now you can see here on a 15 minutes time frame that if you just look at this, you will say the market is in a bullish market structure, because you have this high and you have a new high which is bigger, which is higher than this previous high, and you have this high which is higher than the previous high, and you have a high here which is higher than this previous high, and so on and so forth, right? And on the downside as well is the same thing. You have a low here and you have another low here. This low here is higher than this previous low, and this low here and this low here, this is higher than the previous low, this is higher than the previous low, and so on and so forth, right? On 15 minutes it looks like we are clearly on a bullish market structure, but this structure right here is a structure which is within that 4 hour structure that I showed you, and on 4 hour this is clearly just a move which is a correction move, right? If we now come to 15 minutes and we see this, we will be convinced that this market is in a bullish structure. Whereas if we go back to H4, you will clearly see that we are still in a bearish move. It's just that the market is creating this correction. Now that is what structure within structure looks like. On a bigger time frame, you will be on a bearish move, but if you take a correction move of that bearish move and check it on a smaller time frame, you will find another structure which is different from the structure of the bigger time frame, and that is what structure within structure looks like. This concludes our video on market structure and structure within structure. On the next video, we'll be talking about breakout structure and change of character. But if you have any questions about this video that we did today, you can write your questions on the comment section below, and I will address them either on the next video or create a video which is separate to address your questions. Thank you very much, and see you on the next video.